entities that are incorporated are required by law to produce and file annual accounts. So it's a legal requirement for most enterprises. They're an official record that are approved by the directors. Again, it's the directors going on public record saying that we have approved these accounts to say that the funds and the monies generated by the business have been used appropriately. They allow funding to be sought from grant-giving bodies. So quite frequently, bodies that give grant funding or matched funding often look for proof of success previously, or they will match up to a certain level, often based on previous year's incomes. So by proving that you've been able to run a scheme for a number of years, you can possibly broaden the number of grant-giving bodies that will look at investing in you. And finally, they can highlight potential future problems in meeting long-term liabilities. What do accounts tell us? Often people get confused when they look at accounts because there are different things. A P&L account is an income and expenditure, and that shows you what has happened during the period of that set of accounts, usually a one-year period. The balance sheet is the cumulative results of the financial assets and liabilities of the entity over its entire existence. So you have a P&L, which is, okay, what's happened now, and you have the balance sheet, which shows you everything that's happened since the beginning of the business. A set of accounts usually has some disclosures relating to directors' interests. So directors in any company have to disclose whether they have financial interests in that company. It's the same with the co-ops. And notes to the accounts often provide some insights into the figures that aren't on the face of the income statement or the balance sheet. They'll give you more detail, more breakdown, and we'll look at some of those in a little bit. Has anybody got any questions? No. Right. Just in case, for those of you that aren't clear, balance sheet versus the income and expenditure, which is also known as the profit and loss account. The balance sheet is the cumulative history of the enterprise in financial form. So everything that has been generated and everything that has been spent and what it's been committed to will be shown on the balance sheet from the inception date to the current position, to the current point in time. The income and expenditure account, it shows usually what happens in the last year. The accounting periods are usually for 1 year. The financial year is not a calendar year. It could be, but it can be, it often starts on the date that the enterprise was incorporated and expires the year later. It will show you where your incomes come from and what it has been spent on in the last 12 months. And that leads you to generate an excess or a deficit of income, which is commonly known as a profit or a loss. Is that clear? I can't see you also. I need to somehow change that. I'm just thumbnail. There you go. Right. For community energy projects, funding and cash flows, in order to be successful, we need initial funding. We need income to pay costs that are generated as the project evolves, and we need profit to pay investor returns that they were promised when they gave us their cash to start with. And I like to show this as a flow here. The funding required, again, I thought I'd put a bit of sunshine in the background there, but we need initial capital. So that's the funds that external investors provide and entrust to the enterprise. With that money, we can purchase and install a solar array on a building. and that should then generate power. So without the initial capital, we won't be able to purchase the solar panels, we won't be able to install them, we won't be able to generate any power. Once that's happened, ongoing cash flows will be required in future years, and they come from selling the energy, which generates income. That income will pay the costs, which such as insurance, such as surveys, maintenance, and it will also cover the amount of investor return that was promised to investors in the application document. For most of Repowering's programs, I believe it's around 3%, 2 to 3%.
Yeah.
Profits, I use that word not in a technical term here, but the surplus, once all of those items have been covered, will be used to provide money for the community fund, which is part of the attractiveness of the repowering offers, as well as generating solar power, on a local scale. We are trying to create some enhanced local benefit, and I believe each of the schemes has their own way of doing that, whether it be through apprenticeships, whether it be engagement with young people who live locally. And then in the longer term, we have to repay the capital that was the investors initially provided. Obviously, if an investor gives you £1,000 or whatever it is not usually a charitable donation on their behalf. They do expect to get that back at some point in the future. And with these schemes, they are usually end dated 20 or 30 years. And at that point in time, the enterprise has to return the capital. Now, it isn't returned in the lump sum, it is returned throughout the life of the enterprise. And you can think of depreciation, which we'll talk about in a bit, as covering those costs over the long term. Does that make sense in terms of funding and cash flows? Good. This slide here is a snapshot of the accounts from Brixton Energy Solar, which has been going for, I think, about 8 years. And hide that so I can see that bubble. And so this is a snapshot from the balance sheet for the year ending 31st December 2019. And it's pretty standard. You can see in balance sheet, you have 2 years worth of figures. On the far right hand side, we have 2018's figures, and then we have 2019's figures further in to the left. So on most sets of accounts, you get a comparative with the previous year. So that just helps people. They don't have to go back and look at separate accounts. There's always a comparison available. And as I said earlier, the balance sheet shows the total impact of all historic activity. If you start at the top, fixed assets are what any business has to generate its revenues and its tangible products, tangible assets. So for an energy co-op, it is predominantly, if not 100%, going to be the value of the solar array. So you can see the cost of the solar array hasn't changed between 2018 and 2019, £56,800. If additional solar panels were installed for Brixton Energy Solar 1, then there would be an additional cost that would be reflected. The next line down shows depreciation. And depreciation is a notional amount. It's not a cash amount. It is a notional amount that says over time, these assets lose their value, like any asset, whether it be a car, or a TV, it doesn't last forever. And for accounting purposes, when you purchase an asset and bring it into use, you have to determine what its expected useful life will be. And for many in normal businesses, so IT equipment is often just 3 years, and you write it off over 3 years. For the solar arrays, Brixton Energy Solar determined that they had a life of 30 years at the beginning of the enterprise, and so that £56,800 is written off over 30 years equally. So at the end of 30 years, the net value of the assets will be zero. And you'll see that going through on the profit and loss account on the next page. The current assets are money in the bank, debtors, which is money that people owe you. So that could be people that have purchased the power and not yet paid for it, and prepayments, which are things that we have paid for but not yet received, or we've paid for things in advance. So at the moment, at this point in time, at the end of 2019, there was £31,404 in the bank. The next block down, current liabilities, I put an arrow there to sum up. That's financial commitments not yet paid for. So there's £18,638 there that are liabilities, things that Brixton Energy Solar owes to other people. The first one there, 2,429, that's interest due to shareholders, so it hasn't been paid yet. The Community Energy Efficiency Fund, so this is the monies that go into for local benefit, 12,224. That has not yet been spent. Provision for the inverter. Inverters may not have a life as long as the solar panels, so we have to assume that we may need to replace the inverter at some point during the lifespan of the solar array, and therefore each year you put aside a bit of money so that it doesn't come as a shock and a one-off lump sum. So overall, that means that at the end of 2019, after I think the 7th or 8th year of Brixton Energy Solar, they had net assets worth just under £60,000, and that was represented by shareholders funds, which is the shares, 57,450, which you can see is slightly less than it was the previous year, and we'll explain that in a minute, and built up profit of £2,425. For that year, the P&L, the income and expenditure statement, shows that the income from selling power was £6,100, very similar to the previous year. And expenses during the year, we've got operating expenses for insurance, provision for the inverter replacement, which again I've said that's a notional amount put aside for future costs. As I told you, it's built up over time. Then there was some legal and admin fees, very similar to or the same as the prior year, and then other costs. Shareholder interest here, 1,724. That was the interest promised to investors when they invested in the fund. And then the CEF, the Community Energy Efficiency Fund, £431 was put into that. It's not cash spent. And that's what you could see on the balance sheet, that so far there is £12,224 available for spending in the Community Energy Efficiency Fund. That meant that the expenditure, not cash, but a cash plus the notional amounts put aside for future costs, more or less matched the income from selling the energy, with a slight surplus of £128. that £128 is reflected down the bottom here in the reserves, and is the difference between the 2018 and 2019 income and expenditure reserves. So there's a small profit being built up each year, which can be used obviously in future either to cover unexpected costs. It can be used to enhance the community energy efficiency fund. That's a decision for the directors to take. Any questions?
There are some questions in the chat.
Ah, right, thank you. I'm not right. Thanks, Afshin. Hold on, chat 4. Right, give me, that's not popping up. Right, let's see. Sorry. Yeah, okay. Is depreciation effectively to make the cost of the asset in the accounts reflect the price you would get if you sold? Mark, that's a theoretical answer, yes, but in practice, what happens with depreciation is that businesses depreciate assets on a straight line basis. So much like if you bought a car, the first year it will lose more value than the second year. So in business, often we assume the reduction in value is the same each year over its useful economic life. So the theory is yes, but the reality is that it's not likely to be exactly the same as the second-hand value. Does that help?
Yes, thank you. That's clear.
Okay. And obviously, for things that have a short life, so IT equipment in businesses where usually it's 3 years, it's written off over, it makes no difference, you know. But when you're talking about 30 years, yes, who knows whether the selling, if we were to resell that solar array, whether it would have the value that the books show it as. But we know by the end of 30 years, it will have effectively no value. Francesca, what would an example be of a prepayment? So insurance premiums or can be one, because you often pay for those for the whole year in one go at the beginning of the year. So so in the first month, you've effectively paid for 12 months, but you've only got 1 month's worth of costs. So if you were doing a monthly profit and loss, you would have a prepayment of 11/12 of the amount you paid. I'm just trying to think of another example. Would be if you had commissioned somebody to do some work, some installation, say a new solar array was to be put on the roof, and the installer said, I need 50% up front to guarantee that I'll turn up, you know, with the scaffolding. So say their bill was £10,000 for installing. If you paid them a deposit of 50% and your year end happened to come before they turned up on site, that would be a prepayment of £5,000 because somebody owes you work to that value. Does that explain that or help that?
It does. Thank you so much.
Okay. Pippa, on this BS statement, where are the expenses relating to spending the community fund? Oh, CEF. Yes, CEF is the community energy fund, Pippa. And on this one, it looked the amount disclosed, £431, that could be actual cash spent, or it could be a combination of actual cash spent and amounts put towards the sinking fund of the 12,000 that's on the balance sheet. So you can't, the P&L is not a cash flow. It doesn't show you the actual cash that's spent. It shows you the commitments that have been made for cash.
Okay, that's really helpful. Thank you, Chris. And just out of interest, in terms of the income less expenditure for these co-ops, does that income ever go into the community fund or not?
My understanding is, and my belief is, that the directors will decide what happens to that. So as I said, it could be used as a contingency for any unexpected costs that aren't foreseen in the cash flow forecasting. But I would certainly, as a director, hope that if there was a surplus of income over the years, that would be allocated to the Community Energy Efficiency Fund for local benefit. However, and I caveat this, for the first few years of a project's life, it is prudent to build up a reserve, because you don't want to, if you have profits in the first few years and then you have a few years where you have a loss, let's say, you know, the solar generation falls off for a few years for whatever, it's cloudy, you don't want to run out of money. So I think you have to take the longer term view, and that decision will be at the behest of the directors as to what happens with that surplus. But the directors don't get it. It doesn't go to, it won't be given to anybody. It will have to be used in agreement with the aims of the business.
Okay, thank you.
Afshin, insurance is a prepaid cost. Oh, sorry. Sorry, Afshin.
I was just responding.
I hadn't seen these. I apologize.
Brilliant.
You could see my screen, so you could see that I couldn't actually see
Yeah,
these.
you've answered it as yeah, perfectly, because yeah, those are the responses we put in the chat as well.
Okay.
Thank you, Chris.
What's this last one, Michelle? Inverter is a liability, but we don't spend this until the moment comes. Correct. Does this money physically sit in the same bank account? No, it will sit in the same bank account. You don't ring fence amounts unless there is usually a legal or contractual reason to do so, because setting up a bank account has a cost, and you don't want to incur extra costs by having extra bank accounts. Okay, I shall just move on to a slightly different set of examples from Vauxhall Energy, which is a new project. So we have the balance sheet here from the same period, 31st December 2019. But that 2019 was the first full year of operation for Vauxhall Energy. So a very different financial situation than Brixton Energy that had been running for 7 or 8 years. So if we just look through this, you'll see that the cost of the assets has increased. So this tells you that at the end of 2018, the full solar array had not been installed or not been purchased. So during 2019, further work was done to enhance the solar array at Vauxhall. There was no depreciation in 2018 because the assets were not complete and probably not brought into use. So that's why that figure has changed. Looking down at their current assets, their bank account looks very very limited, £1,734 only, whereas the previous year, if you just looked at the bank, you go, oh wow, they've got £50,000 in the bank. Well, obviously that £50,000 was spent on more solar array, and we'll look at more things going on. But there is £8,000 worth of debtors, that monies owed to Vauxhall Energy at this point in time. However, to offset that, they owe £10,000 to other creditors, and that gives them a negative net current assets, which means net current assets, by the way, is generally thought to be a description of the quickly realizable position of a business, because your fixed assets will take time to liquidate or sell, whereas your current assets and your current liabilities are what things you should be able to turn into cash in a short period of time. Overall, Vauxhall has net assets of 47,000, predominantly the solar array. It has shares, 50,441 shares supplied by the investors. None of the capital has been returned yet. As I said at the beginning, the capital is returned over the life of the project, and that generally is covered by depreciation. Then this is, I thought you might find interesting, the first year Vauxhall Energy has a loss of £3,327. So they are in the opposite position from Brixton Energy. This is their P&L. So in 2018, they didn't have any P&L. They didn't generate any income. They didn't spend any money. Now we've got here income of £2,696 from sale of electricity and the feed-in tariff. And as I expect most of you know, that feed-in tariffs have come to an end, unfortunately, for new schemes, which was an additional payment from the government in addition to what you got from selling the electricity. Insurance and repairs cost just under £700. There were costs associated with the issuance of shares. There always are. So this is, a problem that for small businesses, you have to raise more capital than you think you really need because of the admin costs involved with the actual share offer itself. Now then, over here, we've got the shareholders' interest, which is, again, the interest promised to investors, not been paid. Community fund, a notional amount of £100 was put aside, and then depreciation on the full year, and we'll look at that in a moment. So that led to an excess of expenditure over income, aka a loss of £3,300 for the year. But it's the first year. And this is what I was saying, I think, to Pippa, that when small businesses, enterprises make a profit in the first few years, it's prudent not to spend that because you need to cover years when you may make a loss. Now, this is the first year for Vauxhall Energy. They've made a loss, but it's not a cash loss. It's an accounting loss. Here are some of the notes that go with those accounts to explain things a bit more. The date when the cooperative was registered, who the directors are and what their investment and their involvement financially is with the enterprise. No directors received any remuneration during the period, which is what we'd all expect. But if you do, you have to disclose it. Then all companies have to talk about accounting policies that they follow, what accounting conventions. And the FRISI, the Financial Reporting Standard for Smaller Enterprises, entities, is what's being used here. So there are a number of different ways of accounting, and big multinational corporations follow different rules from small businesses and small enterprises. Income represents value of sales net of VAT, and this is just a point of interest. VAT is not income. So if you sell as a business, you sell something for £120, your income is £100 and VAT is £20. Your income is not 120. Your income is 100 because you do not own the VAT. It is not your income. It is monies that are passed on to the government. And fixed assets. This explains the write-off of the asset over its useful life. The solar array has an expected useful life of 20 years. So every year, 5% of the cost will be written off. If we just look here at some more, oh, there we go. Some more notes here. We can see the cost at the beginning of the year, additions to the solar array, but that was assisted by a £15,000 contribution from Angers and Lambeth Council. So the actual cost to Vauxhall Energy for the solar array was £50,000. That £50,000 will be written off over 20 years. So 1/20th of this will be charged to the P&L every year, £2,500. Trade debtors, £7,700. Presumably that is income not yet paid for, not yet paid for. Not quite sure. Afshin might know that. But let's just move on to the next page here. So I think this shows why you have to look at the notes to accounts as well as just a balance sheet and a profit and loss. In the creditors, i.e. people that are owed money by Vauxhall Energy, we've got trade creditors. Now that could be maintenance, that could be insurance, that could be surveys, whatever. Accruals. Accruals are expected amounts that you are committed to pay, but you haven't yet received the invoice for. So again, if you, it could be again, say maintenance work. If the maintenance man has come and done some work and says, I'm going to send you an invoice for £1,000 and you've agreed to pay that £1,000, but you haven't paid it and you haven't received the invoice, you would accrue for it. So you know you're going to get a bill for that. VAT is, as we just discussed, it's money you owe to the government. It's not yours. Interest payable. Now this, I put 3 lines here to show how this all works, because the interest is the monies that is due to the investors. The investors provided £50,441. I apologize, there's a typo there. They provided £50,441 of capital. They were promised 3% interest. That would equate to that amount there, £1,513. And you can see that in the note there. So that's the interest due. And you're thinking, well, why is that different to the figure in the creditors here, 1,230? Some investors agreed not to receive their interest. They waived it. So they generously allowed that money to be used for community purposes. And that is shown here, £283. So if you deduct £283 from the 1,513, you get £1,230, which is the actual cash that will need to be paid to the investors for that year. Community energy efficiency funds built up here. It was nothing at the beginning of the year because this is the first year. Nothing has been spent. Contribution from profits, even though actually there was a loss this year, but we're still calling it a profit, was £100, plus the interest waived from shareholders. So the total amount available for the Community Energy Efficiency Fund for Vauxhall Energy was £383. And obviously that will build up over time as this waived interest will happen every year and amounts as the enterprise makes money from the profit. Contribution from the profit can be added to it. The share capital, 50,441, no change in the year, nothing was repaid. But they're all repaid after repayable after 20 years. So in future years, an amount of cash will need to be put aside to repay that. And because that's repayable over the same time as the useful life of the solar array, and the value of the shares investment is approximately the same as the cost of the solar array, I think it's easy to just think of depreciation as effectively the repayment of the capital over the life of the project. That was the end of my slides and my hopefully useful introduction to accounts for 2 different co-ops under the repowering umbrella. So thank you for paying attention, and I'll just see if we've got some more questions. What have we got here?
Can I ask a quick question, Chris?
Yes, of course.
So when we do sort of the initial engagement around these types of projects and are asking people to invest, for Lambeth Community Solar, we said there's a potential of a 3% return. What I'm not clear about is what the risk is on that, in terms of, could people lose everything? Is there some guaranteed return, and how that works?
I would have to go and look at the offer document, but I would be very surprised if it did not say there was a risk to your capital, because any investment, almost any investment, comes with risk. So I believe the wording would say that the 3% interest is what is hoped for, what is planned for, what is estimated. And if there was a disaster, and I can't think what one was, but let's just say, a meteorite took out the solar array and wiped it out, and there was no future income, then the capital would be lost.
Yeah, so that's a very very low risk described there. Then would that be a fair way, do you think, to represent the investment if you're talking to people?
Personally, yes, and this is just purely my personal opinion, because solar arrays are static, they're simple, they just sit there and they generate power. So pretty much you can estimate how much power they're going to generate. I can't, you can't, but there are technical people out there that can, and they know roughly what the life of that's going to be. So as long as you think there's going to be a market to buy it over the lifetime of the panels, you can estimate your income. And as long as that exceeds the cost to set them up and the running costs, then you should be able to repay the capital, as I say, using depreciation as a proxy each year for the return of capital. But there may well be some years where you make a loss, and other years where you have a surplus. But I think the wording in each of the offer documents, I'm sure Afshin can confirm, but I'm pretty sure no one would sign off on anything that guaranteed that, because that would mean the directors would become liable for that, and that's not that's not likely to have happened.
Yeah, no, that's right, Chris. We do highlight that we can't guarantee the interest payments on an yearly basis. It's a target, that's the ambition, and yeah, we do have a risk register and a risk page where we highlight that these are, any investment is at risk. And Eva, I think you were part of that.
Yeah, definitely. And so it's always like we aim, as Chris said, we aim to repay. And I think that's also just the principle of an investment. When you buy shares, you're not lending money, you're buying shares in an enterprise, in a business, and if it works well, then you'll get your money back and a return. So it's not like lending money, it's really investing it. So that's the nature of a share, is that it's not guaranteed.
I'll just look at these couple of questions here. Is there a defined time period for current assets, whatever can be into 3 months, or is it discretionary? It is discretionary, but most businesses look at 3 to 6 months. So it's anything that takes more than a year to liquidate should not be in current assets. Anything that is not going to be able to be turned into cash before the next accounting period ends shouldn't be in your current assets. So 3 months is a pretty standard rule. what's this one? If you have raised a bit more money than you actually needed to purchase assets, how do you depreciate? Well, that the money raised would go into your capital. It wouldn't go into your cost in your assets. So that would show effectively as a surplus. So your income, it would be in the bank as cash. So if you raised £100,000 from investors and the solar array cost £90,000, assuming no other costs, you would have £90,000 as your asset, which would be depreciated, and you would have £10,000 in cash in the bank to do other things with.
Okay.
So, Francesca, how much can weather affect the profits? I'll let Afshin talk about that.
I think it's fair to say not the weather, but what we have found over last year during 2020, there has been an impact on our ability to sell the electricity to the schools, because the on-site demand has been lower than we had originally anticipated, because we didn't obviously see shutdowns happening in the way that it happened, or particularly when the sun was shining the most during the summer. So yeah, we will see an impact of such kind of unforeseen circumstances on the finances. So likewise, some years the output from the solar panels can be slightly higher or less, and it really depends on some amount of weather. But I think more or less from a weather impact wise, we haven't seen huge differences in our output and yield. So we haven't seen that impact our profits.
And I could just say on a personal basis, I have solar panels on my house here in Streatham, and I have done for 12 years. And over the 12 years, they have generated almost exactly what was predicted when they were installed. Some years it's below, some years it's above, but over the 12 years, it's about 2% more than was predicted. So I do think the modeling for solar is pretty good. So yeah, some years it can be 4 or 5% below expectations, other years it'll be 4 or 5% above, but say 12 years on my roof here, and it's pretty much in line with the what was sold to me when I bought them.
It's a solid technology.
And I say it's simple, it just sits there. So that's why it's a simple business to invest in, because there's not that many complications once it's running, it's up and running. Pippa.
Yes, so I think it was a couple of slides back, it was a slide which was talking about Vauxhall, and it was there was a £15,000 annual contribution.
No, that was a one-off contribution from the council to buy the assets.
Yes, so, and you mentioned that doesn't go into the actual asset, what they're kind of worth. So where does that go on the balance sheet, that, or on the kind of P&L, I guess?
I haven't looked into that, but my expectation would be that if it was received as a donation from the council and ONG, they would have effectively, when the invoice came in for £50,000, repowering Vauxhall Energy Limited would have paid 35,000 and they would have paid 15. So it would have had no impact on the accounts, because it would never have been money, or it could have been £15,000 that went into the bank account and then immediately went straight out again.
Yeah, that's what happened. So the cost of the solar panels were, so how much was it? £65,000, I think. So that's the 32,670 and the 32,670 added together. Yeah, so roughly that £65,000. We raised the 50,000, or slightly above 50,000 from community shares, and the remaining 15,000 from the ONG and Lambeth Council covered the cost. So literally the money, came in and went out. So basically went to cover the cost of the asset. So it wasn't a profit or anything. It was a contribution towards the cost of the capital.
Okay, brilliant. Thank you. Yeah, that's really helpful. And then
The other way that it could have happened would have been, say they could have said, okay, we will invest the further 15,000, so that the capital has been increased to £65,000, and that would then needed to have been repaid. But they made it as a grant or a donation that was non-repayable.
That's right.
Okay. Thank you. And just one very brief other one, sorry, hogging. I think it's on the next slide where they talk about the community fund, and there's still, I think it was £100 put in, despite the fact they didn't make a profit. Why is that? Because of a commitment or something?
So the directors made a decision that we wanted to put some amount towards a community fund. Mind you, this is, it's money set aside, it wasn't spent. So this is, it was a director decision because of the commitment for Vauxhall to do so. It's a small amount, so we were making a loss anyway. So we put in £100, which wasn't going to affect the bottom line significantly.
It's always important when people see profit and loss, or you hear about them and the media, to actually try and look at the accounts, because the headlines can be they can hide all sorts of things, and they are not cash. So when somebody, a company says it's reported record profits or record losses, it's not, it's never cash. It's and particularly with losses over COVID, during the COVID period, I can tell you lots of companies have reported record losses, and that's because they've written off lots and lots of things, and it just means that next year their figures will look really good. It doesn't mean they actually lost lots of cash. But obviously that's not going to happen in small community energy schemes like this. But what actually is effectively saying is that even though there is a notional loss from an accounting perspective, you can still commit money to the community energy fund, because we know that funding, that money in cash terms, will be generated over the next few years as Vauxhall Energy sells the power. When we get back to normal and the schools are buying, and the usage for the solar array picks up again.
Thank you.
Thanks, Chris, for kind of going through the Vauxhall one, because it is quite a different position than our existing co-ops, and a reason why Vauxhall also had this negative value was because there were a lot of technical issues with the setup of the panels and the electric wiring that took place, and as a result of that, there was a significantly lower yield from the panels, and then less feed-in tariff and all of that. But we are hoping to see that turn around this year.
Okay, so I've got two questions, Ajay and Mark. Ajay.
Hi, Chris. Just a quick one. So I don't know if we use the Vauxhall Energy as an example, so where a dividend is being paid, where would that be highlighted in would it be in the P&L?
There is no dividend, it's interest. So
sorry, I missed that one.
The investors don't get dividends, they are getting an interest payment based upon the amount they've invested. So you'll see it here, interest due to shareholders. In a normal PLC company, they would pay a dividend based upon the profits and the cash that they have retained profits. The structure asking for investment for the Vauxhall Energy, Brixton Energy Solar, etc., was not about making a distribution of profits as a dividend. It was a promise to try to return 3% of the invested amount to investors every year. But you could think of that if this was a big company, that would be the equivalent of them declaring a dividend of 3%.
Understood. So that would normally be in the P&L. That would be highlighted.
Yes. So hold on. Let's go back. That's in. So because this was the first year, let me get rid of this. First year, there is we've got shareholder interest here, £1,513. So
Yeah.
that's, but it's not cash. That's the calculated amount.
Mm.
And that's in the P&L. But yes, in another business, it could have been shown as a dividend, but that would come in a different place on the income statement. And then if you look at this one, I explain how that £1,513 was calculated. It was 3% of the share capital, but £283 was waived by some investors. So the actual cash that needs to be paid out will be £1,230, meaning the difference can be added into the Community Energy Efficiency Fund.
Okay.
Mark.
Thank you.
Yes, thanks. I'll try to get my head round, and you've talked about this a lot. I think basically the difference between the cash balance and everything else. So as a person, I sort of judge my income and outgoings by looking at my bank statement and seeing how much cash is there. But for accounting, in fact, it seems that the cash in your account isn't actually very important.
It's not unimportant, but it is not the full picture. It is part of the picture. The cash in your account is an asset. It's, you know, it's something you own that is yours. However, imagine you've got your council tax bill to pay, and so you've got your rent or your mortgage. You've got your bank, what's in your bank account today, but if you know, you've got £1,000 going to go out next week or the 1st of May for rent or mortgage or whatever it is, it wouldn't be right for you to say, oh, look, I've got £6,000 in my bank, I'm worth £6,000, because actually you owe somebody £1,000 and that's going to go. So the amount of cash in a bank account at any one point in time could be indicative of the financial health of a business, but it could equally hide a lot of things. So if businesses don't pay their bills, don't pay their suppliers on time, they could keep money in the bank so they can show a healthy cash balance, but they could owe lots of suppliers. We heard this with Topshop when it went out of business a few months ago. Millions of pounds were owed to their suppliers who have made the clothes. So they had cash in the bank, but they owed tens of millions of pounds to people who had made the clothes for them and had never been paid. So what's in your bank is never a good way of assessing the health of a business. You do have to look at their creditors and their debtors as well.
And just to follow up on that, in this case, in fact, on this slide, so we've got the £100 to the community fund, but suppose that the cash account says, because we made a loss this year, so let's say in the bank there's £5. How can you say there's £100 in the community fund? If someone says, I want that to be spent now, you say, well, I've only got £5. How does that sort of work?
Right. So what's in the £100 and the £283 are effectively promises of things you're going to spend later on. But I'm just going to try and change the page to show you here. Let's have a look. And where's the balance sheet? So the bank account had £1,734 in. And that was all. So that £100 is covered. But what we're looking at here is we can say that, yeah, we actually owed £10,400 to people, other creditors. And you go, well, we only got £1,700 in the bank, so we can't possibly pay them all. But we were owed £8,000 by other people who have bought the services from us. So overall, we've got assets of just under £10,000 and we owe just over £10,000, which means, yes, at the moment, this business has negative current assets. That is not a good place to be for any business. But This is the first year of trading, and the overall assets of the business are positive £47,000 because all the cash that was generated from the investors was spent buying the solar panels. So if the worst came to the worst, somebody asked earlier, is the depreciation supposed to show you the resale price, the second-hand value of the assets? And in theory, that you can take that as a yes. So in theory, if the worst came to the worst, Vauxhall Energy should be able to sell the solar panels, and bring in some more cash. Now, obviously, everybody would hope that 2020 it will have generated some more income. 2021 it will generate some more income, and that the loss will become a profit going forward.
Yeah.
Yeah, thanks. Yeah.
We are out of time, but let's just have a quick scan through these. Thank you, everybody. Oh, I think it's everybody saying goodbye. So
Well, thank you, Chris, for running the session. You've really demystified the balance sheet and the P&L and the mysteries that hide behind the numbers. Very clearly explained. Thank you.
And if anybody does have any questions or things you think about afterwards, drop us a note either via Eva or however.
Yeah.
Because a lot of people do get scared by accounts, and I think financial people deliberately make them opaque and scary in many ways because it keeps them in business, and clarity is always good. So if I can help make it any clearer, I will certainly try.
Brilliant.
Thanks,
Very
Chris.
much.
It was
Thank
great.
you, everyone.
Thanks,
a lot, Chris. That was
everyone.
really useful.
Thanks
you.
so
Bye-bye.
much.
Bye.
Cheers.